Good morning. Welcome to another episode of the Profit Point Show, where we talk about investment and business in general. We start off with a stock market review, where we talk about the top gainers and the losers, and over to the business segment, where we talk about the human resource management for your business, and then to the sectorial segment, where we talk about getting into the business of auto mechanic. All of this after the break. Stay with us. We'll be right back. Welcome back. It's still the Profit Point Show, and this is the stock market segment. I have in the studio with me Ambrose Omodion. Ambrose is an investment analyst from Invest Data Limited. How are you, Ambrose?
Very fine.
Thanks for coming.
Thanks for having me.
All right. So we go over to the gainers, top five gainer for yesterday. We have Cornerstone topping the gainers charts, Union Diagnostics second, and then Regency Insurance, Sterling Bank, Transcorp. These were the top five in the list, and I was asking you before we came on here, that is there anything that is bringing Sterling Bank here? And like you said, nothing. So these top five gainers as of yesterday, were they just the result of market demand and supply, or is there any news driving any of this?
I would say that these are purely market forces. And I think primarily that means demand and supply. Okay. No special, no information from those companies. No, apart from the Continent Allied, that what's it called, the Cornerstone Insurance that give a bonus. I think they marked down for the bonus, and the week they marked down, the price was down, but it's coming up again. And the investor is expecting that, with this characterization in the industry, most of the insurance stocks are cheap and they can play around with. But the other part of it, which I say investors should be very careful, that when we are playing kupu stock as a trader, you are bound to be trapped in this stock, because there's no fundamental that people are paying and buying for dividend, buying for long term. But because we know that with 50,000 naira, you can move 100,000 units that can change the price of the stock. You can easily buy. As now that the economy is still in this way, then people can easily do that just for a while. But you have to be very careful if you are trading volume, because most times if you are trading volume, if you want to offload,
you don't want to sell to.
And if you are the one buying volume, you are going to put it up. And when you are selling it, for that, this kind of stocks, you have to be very careful. But those that are, retail investors that are playing small and planning for their future, are the youths that are planning for long term. You can, as you are seeing that insurance sector is having some prospect now because of the calculation. I will see that more business, is coming with the economy reset. We see that people who starting off need to take insurance, because I'm telling you, most companies have had the hit of this. COVID-19. If you have insured your business, and it will be easier for you. And for now, people are knowing that we need to have insurance. But I feel that after this season, this COVID-19 and 2021, that things start to improve. I think the insurance setup is that one should look at.
Okay, thank you, Ambrose. And then on the losers chart, we've got Academic Press topping the losers chart top 5, and then we have Mansard. We have USN Property, we have GSK. And now GSK, pharmaceutical sector has been the toast of the market for a while. So I'm just wondering what GSK is doing here. As outside, maybe people are taking profits.
That is its profit takers are the one pulling GSK down.
Same thing with USN Property.
USN Property, not profit takers alone. No, the information between the parents company before they sold their holdings to Custodian Ally. Investors are looking at why change of all this. Investors are studying. I told you earlier that Nigerian investors are becoming more knowledgeable when it comes to equity investment. Don't just follow bandwagon now. Because most of them have understand that without investment goal or strategy, you only do try and error investment. For that, people are not just going for any stock that is cost stock. You need to go for stock that will deliver what you want. Because if you have a goal, that goal, now the kind of stock which you put your money.
Thank you very much, Ambrose. Over to earnings. you know, the interesting part of the market is when the banks begin to release their results, because they actually impact the market. They are not cobble stock, and they are not the expensive defensive stock. You know, they are stocks you can play and also get dividend from. And so they're like hybrid.
Yeah, also like they control the market. Apart from the big names, like the MTN, the high cap world. In terms of stock that has liquidity in the market is the banking stock, and that is why any foreign investor that wants to invest in any country, first of all, look at what the banking says because of one regulation, and you know that those people cannot go under overnight because they are highly regulated, and at the same time there's what we call volume that you can trade. That it's tradable. You can also trend. When it is trending, you can go in low and come out high. These are why see both local and look at that sector because that is where there's the opportunity.
Well, when you said they can't go under overnight, they can change name overnight.
They don't change name.
Skybank can go to Polaris overnight. So away from that, let's look at GTB. So gross earnings was up by 1.5%. That's going from 221.87 billion to 225.14 billion. Just a marginal increase in gross earnings. But the profit after tax actually came down by 4.9%. It's still marginal, well, given the situation where they are. And I'm sure if we are to drill down to this result, I'm sure that part of the contributory factor to this is probably the loans. You know, they're highly exposed to retail loan, and COVID is there. People cannot service the loan. Because if we look at Union, when we get to UBA, we see that what actually accounted for the downturn was the loan loss. So, but looking at these results, what do you think about it? Especially given that they declared 30 kobo interim dividend this year, the same 30 kobo they declared last year. So even though their result wasn't so fantastic like last year, they still kept their tradition of paying 30 kobo interim dividend. What do you have to say to that?
If you look at the GT numbers, I'll tell you that number is not a bad number at all by all standards.
Thank you, Ambrose. Coming from you.
no, that's a flat number for me. For that, considering the economic situation and also being that the sector is being hit by this ongoing COVID-19 and pandemic going on, well, most sectors of the economy have been affected. And once the economy is sick, banks will involve. The banks are showing more than I can say that despite the huge provision they are making, if you can see this kind of result from them, I would say the banks are resilient and showing that our banks are strong. But the only thing is that investors also have to take advantage of the low price and see how to take advantage of this, what we are seeing now. So I think that GTB result for me is a good one. But the good thing is that they maintain their dividend plan. And what have kept the market in this direction for a while is this dividend expectation for the big banks, and they've not disappointed more apart from the Stanbic that don't cut their dividend and the UBA. But if you look at the price of UBA and the think what they're paying, and the Stanbic at the 37 and around they're paying a 40 kobo, I think that even as an investor, you see like where can you get a higher yield? Now people will be waiting. Oh, let's take the UBA. But for me, our banks thought that the growth that came from Stanbic, UBA, and GTB. These are, for me, they are not a bad result. That's why the economy is looking like this. That is that our banks are really robust.
You predicted that the banks might actually cut down on their earnings.
Yeah.
And I said something then that they might not, or some of them may not, because they want to keep up the tradition of paying a particular kind of interim dividend they've been paying over years because of foreign investors who are very particular about the moment you begin to change your policy, they're out. They want stability. So I'm sure that GTB would rather just keep the stake than reduce it. Also, the foreign investors also understand that it's not in Nigeria, it's a global phenomenon, it's a global effect. Even big banks in America cut their dividends, some to spend their dividend too, just because of what is happening. But for our banks to stand and really reward investors for interim, it shows that they are big. But the only good thing is that investors should be mindful that with what we are saying, if you are investing in a banking stock, better you enter at a lower price. In case at the end of the financial year, they'll go ahead also cut their dividend. Because you bought at a low price, you still have a good dividend yield. As we speak now, even this UBA yield is far, far better than the new interest rate. We will get to UBA.
Okay. And the 90 days treasury bill. For me, as an investor, you need to just know what we are doing. Because now that inflation is high, and you don't want to go to an investment window where inflation will rubbish your return.
That's true.
And also you can use equity also to hedge against inflation if you are doing it right.
Thank you, Ambrose. Okay, so let's look at Stanbic that has started surprising us without waiting till year end. Gross earnings was up by 7.8%, and profit after tax was up by 24.72%. As far as I'm concerned, that is a beautiful result given this period that we have. And like I said, if you look at these results of the banks, you see that banks that are more exposed to retail loan tend at churning out lesser results, profit, as compared to, I'm sure Stanbic is not exposed to all this quick loan, all this retail loan. So they were able to maintain their profit after tax for half year 2020, and it actually increased by 24.72%. But what is disappointing for me, though, is that interim dividend came down by 60%. Last year they paid 1 naira, this year they're paying 40 kobo, 60% off. And you say that the result is fine, and you also used to say, at what point is a good result when you're not paying your shareholders something?
No, let me just explain so that you understand me. When it comes to this kind of situation, if you look at the result that are coming from other sectors and the banks that are not dividend paying stock, you see there's always a huge provision for what? For bad loan. For this kind of company, banks, really, IBTC, you can see that their performance, top line and the bottom line are good, but costing dividend from 1 naira to 40 kobo, that should be, for me, investor. If you are investing for entry dividend, it will shock you because that is why you are there for now. But for me, in terms of the number, you are thinking of future. I see this is a number that you can. One, I also said that this kind of bank is what we play for what? Defensive. And if you look at the Stanbic IBTC's price, it doesn't oscillate the way others move overnight up and down. The stock is a bit stable, and the shareholding structure of the bank is tight, and it's also reflecting on the bank. For me, the number is good, but the only way, as you just said earlier, is that the dividend payout is disappointing.
Okay, so let me take
on that note, if you are an income investor that have planned to make money in this short time, it's disappointing. But if you want also your fund to be protected.
Okay, Ambrose, if I want my fund to be protected, I'll probably put it in treasury bills, where I know that I'm taking 1.something%, and maybe the money I put in is the money I get out, right? Now, we know that there are some classes of stock that they are so stable, a lot of times traders don't even touch them because you really cannot make money from the up and down.
Okay.
In that case, such stocks are majorly dividend stocks.
Okay.
As in, you know that, okay, you cannot make money from capital appreciation because it really doesn't go yo-yo. But you can make money from dividend. And I think this is where Stanbic falls. So if I am buying Stanbic because it is stable, like you said,
yes,
and now they are bringing this dividend, the only thing that I feel like holding on to, and they are releasing a 60%, I don't think it's fair on shareholders, but then that is my own opinion.
Yeah, I want to tell you that the economic situation also will permit them. The other thing I should let you know that Stanbic have been consistent in paying 1 naira. Before they started with 15 kobo, going to 1 naira. Coming back again to 40 kobo, for me, it's not entirely bad. But investors should know that this kind of investment, if you have entered earlier, your capital gain is not just only dividend. You have gain is only dividend. People have entered at 30 naira, 31 naira, 39, you are selling at 37 naira. It's okay for you, plus this 40 kobo. It's good for me. It's not a bad thing.
Ambrose, I just know that once you like a stock, they are never wrong. Because I know that if it were GTB that brought out this stock,
no,
you would have said something else. Why would they do this?
No.
Because if they are doing this now, you cannot guarantee that they are not going to do something like that when it comes to the end of the year. But we will wait till then.
Yeah, but the numbers are improving. If numbers become better, I think that they can just
like you said, stock is not our wives.
Yes,
so why are we buying stock when we are not getting something from? Or what is a good result when you're not paying me? That is my point.
They didn't deny you anything. They able to take you with something. They say, for me, it's okay. Let's go ahead.
Okay,
because
no problem.
I think there is future for the bank.
Okay. I'll hold on to the future. All right, UBA half year 2020, not a good result. Gross earning went up by 2.24% marginally. Profit after tax came down by 21.69%, and interim dividend came down by 15%. Now, if a UBA come and reduce their earnings by 60% based on this result, maybe we say maybe it's worth it. But they just reduced it by 15%. But then you said we should wait for the future. So let's not go back to Stanbic.
Yes.
Let's get UBA result. Profit after tax, not so good. Dividend, of course, 15% down. What do you think?
Yeah, as you just said, that is a misnomer for me, for UBA. And investors should see that this is a bank that has operation in no more than almost 20 African countries that you have their branch. And their numbers are looking this way. Tell you that you can see the impact of the pandemic in African continent and all. That is why the number is big. And also, the provision also they make for non-performing loan or loan that they expect to go bad is also reflecting on the number. But for me, investors should, as I said earlier, that you look at what is in there for you as of what yield, and that yield is what investors are looking at now. If I'm collecting 17 kobo against 6 naira 30 kobo, or going for 40 kobo against 37 naira, or going for 30 kobo again, you as an investor should know where. Yes, like I said, you must also play with what good entry strategy and exit, and also protect your capital. No matter what you're investing, your capital is key. You need to know, okay, even though I'm taking dividend and capital, let me protect my capital. And which of the banks that know that, their price can always be a bit stable. For me, the banks as well, the big banks, UBS, Senate Bank, and GTB, their numbers are not their performance price movement as a bit stable this time. They are not going below 580 up there. For it was GTB and Access. And the Zenith Bank has remained above 16 naira for like almost two months now. Say that they are becoming a bit stable there. But I know after this interim dividend we expect a little correction in the market. Then they cannot take advantage of the pullback to position for the full year earnings.
Okay. Thank you, Ambrose. Briefly, let's talk about Red Star Express full year 2020. That's a stock or company that's been performing well, whether good or bad. Good, bad, ugly economy, they've just been consistent in their performance. So revenue went up by 4.7%. Profit after tax went up by 0.59%. And dividend was down. Full year, 35 kobo dividend.
Yeah.
How much is the stock now, though?
The stock is around 3 naira 65 kobo.
So it's about 10%?
Yeah, 10%. Yeah. But the good thing is that investors should be very careful. This March account that are paid dividend now, if you look at the first quarter that came from the March account, especially the Red Star, University Press, and Len Africa. Len Africa first quarter was better, others are in red. But you can see that the number for Red Star, really the bottom line was just flat. It tells you that they are investing in other business, especially logistic bit of going to agriculture, movement agricultural goods from farm, trying to make it more along the chain. But I believe their investment was slowing down the profitability. But no, after this season, this economic reset and pandemic, I see improvement in them. But their dividend declining is obvious that they've increased their share in issue by way of their right. That right how to dilute the earnings. That's why I say that the earnings dropped from 76 kobo to 67 kobo because they've enlarged their share in issue. But if you look at the numbers, they are almost the same thing. The profit after tax, but there was a decline in the earning per share. That is that because of the enlarged share capital. But for me, 35 kobo is not a bad dividend.
It's not actually. It's like 10, almost 10% per year.
Yeah,
that is more than treasury bills. That is definitely more than.
But only that is still below inflation. There is a little bit. Okay. You can only use it, but it's good.
But if you're just coming in and out, I mean, inflation is for a year.
Yeah.
Okay. All right. Learn Africa full year. Bad. Revenue was down 17.56%. Profit after tax was down 50.61%. So
if you look at that in Africa, the 2019 result was 15 months, while the 2020 was 12 months. The decline is okay. You can pardon the border because you had 15 months result for 2019 because they adjusted their year end from December to March in 2019. That's why they have a 15 months result. Now they're having 12 months. You can see the difference. But the good thing is that the company still go ahead to pay
dividend 5 kobo. How much is the stock?
The stock is around 1 naira 10 kobo now, and their first quarter result was really one of the best results from the academic sector, or the service sector, especially from studio press, the university press, and the academic press.
All the presses.
The press exactly. It's a good result.
Right.
Only that the first quarter is not giving investor hope. If you are looking at the full year 20 March 20, you'll be a bit scared. But when you see this first quarter, as an investor, you are there, you need to just, okay, that means this company is coming up. I always tell investors that any season tells you whether you should hold a stock or you should leave it. Once you see the number is not permanent, sell off. Like you just said, stocks are not what like you. Once that they are not doing well, instead of number that will not support your objective, you sell off and move out from that particular stock.
All right. Thank you very much, Ambrose. Thanks for coming on to this episode We go on to the next segment, which is the business segment, and we will be talking about human resource management and what you need to know about it, how you need to run it for you to achieve efficiency within your organization. All of this after the break. Stay with us. We'll be right back. Back to the Profit Point Show, and this is the business segment where we'll be talking about human resource management and what you need to know for you to run your organization efficiently. I have in the studio Mr. Samuel Temitokwe Apanishile, human resource management expert.
Thank you so much
for
having me.
Good morning. Thanks for coming, sir.
Yes.
All right. So when it comes to human resources, I know it goes beyond recruitment. It entails training. I mean, a lot of things. Basically, the way of life the organization actually imbibe as they run their business. So let's talk about what human resource management actually entails beyond just recruitment, salary, and training.
Okay, beautiful. Human resource management actually exists in an organization. So before you begin to understand HRM, human resource management, you need to understand what the organization itself really is.
Okay.
Now, an organization is a viable entity, very complex, probabilistic entity, meaning it must be able to achieve its goals under any condition. And for an organization to achieve its goals under any condition, that organization must have the capability to do so. The capability comes from people. People are the major resource for any organization to achieve its goals under any condition. Okay. So HRM can be divided into two. So you have HR, human resource, meaning people, and the way they think. Not just people, but people and the way they think. Then HRM, human resource management, means the policies and the practices that you employ in improving that organization capability through people and the way they think. You will notice I keep mentioning people and the way they think. The way they think is resourcefulness. And that's why we need to bring the H in HR, the human in HR, we need to bring it back. We need to stop treating people as machines. We need to start treating them as humans. And then we need to bring the R in HR. We need to bring it back as resourcefulness, not resource now, but resourcefulness. Imagine a car is a resource, but can it survive and thrive under any condition? That's resourcefulness. It is that resourcefulness that is the key. And so HRM, human resource management, should, I think, and I propose, and I tell people that it should be replaced. There's a new rethinking about HRM to now be human resourcefulness magnification. Management must be able to management enables something. It expands something, makes something better, makes something achieve better outcomes. So it's about magnification. not the idea of management that stifles some things or that limits something. It's more about enabling something to be better. So human resourcefulness magnification, ability to make your people think better, communicate better, make better decisions, make better judgment, and be able to manage uncertainties. Remember, we are now in the period of uncertainty, complexity, chaos, instability. Can your people perform better under these conditions? That is resourcefulness. So human resourcefulness magnification. If you are not magnifying that resourcefulness in your people, you are not doing human resource management.
Thank you, sir.
Thank you.
All right. Over to the quality of goods. Okay, let me use your word. Human resourcefulness magnification.
Magnifier.
Yeah.
Human resourcefulness magnifier. Yeah. Or an
quality,
enabler.
yes.
Yeah, the quality of a human resourcefulness enabler or magnifier. You yourself must be resourceful.
Okay.
Right? You yourself must be resourceful. That's number one. A human resourcefulness enabler must be a good communicator. Must be able to understand the times, situational analysis. Must be a good listener. Must have sympathetic attitude. Must have leadership skills. Leadership skills entails your ability to reduce uncertainty. That's what leadership means. It is during uncertainty that we know whether you are a leader. A human resource person is a leader. And leadership is all about reducing uncertainty. Leadership is difficult to define, but it's easier to notice. It's easier to see. When you see leadership, you know. Leadership reduces uncertainty. It brings clarity. So you must be able to, you must be someone who can bring clarity. You must be a good listener. You must be a good communicator. You must also be wise. We are now in the age of wisdom. We have transcended intelligence. We are now in the age of wisdom. Why? Because machines are coming to do intelligent things. So what is left for humans? There's another space, which is called wisdom. So a human resource magnifier or human resourcefulness enabler must be a wise person. Yeah.
Interesting. Sounds more like those attributes are actually innate, not something you learn from school.
Well, we need to work on our education. The way we train our people, the way our education system is more about just generating a resource. We should bring logic back to our education. We should bring critical thinking back to our education. Our education system keep producing graduates who lack logic, who lack critical thinking. And that is why when you want to employ them, don't look at them as resource. Look at the resourcefulness in them, and that is what you should get. And probably that's why I'm in the professional certification space, and that's why we encourage people, after graduating from school, you should try to get some professional certification to bring out that resourcefulness in you. So really, our education system needs to be really redefined. We need to bring back critical thinking, logic, which we in our space call risk management. We need to bring it back to our educational system. We still train people to be a resource. We are not training them to be resourceful. And why would I hire you when you are not resourceful? When new challenges come up and uncertainty come up and things we have not seen comes up and you cannot respond, because that's the meaning of resourcefulness. Ability to respond to new opportunities, to threats, to chaos, and you can, when you're driving a car and it gets it for, I don't want to talk about any brand, but there are some cars that once you just get into a pothole, there is the tire shifts. They are not resourceful, but there are some cars, when you go into the ditch, they still come out, they even bounce back better. That is resourcefulness. And our education needs to really train that out. And it's within, like you said. So education brings out something. And people are people. God created people with resourcefulness. But can our education bring it out? Can our professional programs bring them out? That is what we are talking about. And you as an organization that's all about people, have you designed the organization to bring out that organizational capability, that resourcefulness in your people? If you cannot bring it out, you're doing organization, and you are really not an organization.
Interesting. All right. One of the cardinal responsibility of a HR manager is recruitment.
Recruitment, yes.
Yeah. So let's take it from the organization point of view, because the HR manager cannot just recruit on his or her own. It has to be based on the need of the organization.
There's a need.
So what should an organization consider when you want to begin recruitment? Yeah.
It still boils down on resourcefulness.
Okay.
Don't waste time hiring and promoting somebody that is not resourceful. That is, people that will not help you achieve success in your business. Right? So the things you should look at is this person open-minded? It's not about just bringing CV and the way we hire these days don't measure resourcefulness matrix. They don't have the matrix for measuring resourcefulness. It's a hard sell. Some people can argue about it, but just go back to the process you use in hiring people. Is it targeted towards resourcefulness, or is it targeted towards them being just resources, right? So you need to look at, in hiring people, definitely there's a need somewhere, and you need thinkers. For example, I told someone, I said, what do you do? He said, it's a marketing professional. I said, you are a marketing thinker in this organization. You are an accounting thinker. You are a finance thinker. You are an engineer thinker. That thinking capacity is the resourcefulness. So when you come in, when we want to hire people, look at how open-minded they are. Look at how imaginative they are. Look at how proactive they are. How can they bring clarity during complexity? How can they gain understanding during uncertainty? Can this person anticipate, and is he agile during situation of ambiguity? All right? Those are the things I want to see. And if I can sieve that through my metric of hiring, I've gotten the right person. So from the pool, hire the best thinkers. Hire the most resourceful people. Those people that can bring clarity during complexity, understanding the situation of uncertainty, anticipatory. Those people that are anticipatory and are agile during situation of ambiguity, and clarity in the space of complexity. Those are the kind of things. Those are the metrics that will measure, that will mark those we are trying to hire. If you score good points in those areas, I hire you.
Okay. You're in the HR space, so aside the fact that I know generally you want to recruit, you give them aptitude tests. Of course, then over to one-on-one interview.
One-on-one interview.
This stuff that you listed,
yes.
Right? What kind of tests will an HR manager put in place?
That's
for him or her to know if the person is, has critical thinking, can react on the spot. Because many of this might have to be experienced, right? You might have to watch the person do it before you can say the person is that. But at the point of recruiting, what can you do to actually know if this person can do other things?
That's where the space of technology comes in. And that's why people come to our consulting firm to leverage on our technology. We have a human economics tool that we use in enabling the hiring and even in the interview process, right? Like I said, there are new set of tools that help you target and focus those resourcefulness, right? Those are the areas where we have the advantage. And people can come for that, but you need a human economics tool. That is what I would tell HR out there. Search for an human economics tool. But interestingly, in the world, we are the one with that human economics tool. We've designed it, and organizations all over the world are tapping into it. They are designed with a particular matrix that go deeper to check, that goes beyond the first order effects, the aptitude test, and go deeper into your mind, where the resource, your human computer, to see whether you have clarity, you can make sense of uncertainty, you can make sense of ambiguity, you can thrive under situations, you understand probability.
Okay,
you understand.
that's fine. Okay, thank you very much for that.
Yeah,
now,
beautiful.
We've skipped the process of recruitment, so we have this fantastic member of staff. How do you keep staff? Because I know it goes beyond salary. Salary is important.
It's important.
But you see that some people, you meet some people, they have seemingly fantastic job. They are well paid, and they still leave. In fact, some people actually leave to take up a lower paying job. So what should organization put in place to actually retain good ends?
We've answered it from the beginning.
Oh.
And if you would help me, you still tell me, Sam, are you talking about resourcefulness? Yes, I'm still talking about resourcefulness. The only thing that motivates any man is if his resourcefulness or our resourcefulness has been engaged, has been tapped into. That's why a salary is the least thing. Though it's a very good one, it's critical, but if you are paying me as a resource and you're not paying me for my resourcefulness, I'll still feel undervalued. So have you designed the organization to be a human resourcefulness magnifying organization? Those kind of organizations would definitely attract and retain the best talent. Number one, you need to provide training opportunities for your people. You need to provide training opportunities for your people. You need to stop this 9 to 5 everyday mentality. And COVID, thank God, nature has helped us out in that area. Then you need to also encourage interconnectedness, which corrects what we call stank ranking. Stank ranking, you can't see such in organizations like Microsoft. In Microsoft, in all these tech organizations, everybody win. Stank ranking is this team is the one performing better than this person, this man is performing better than this woman is performing, where you begin to segregate and it's reductionistic.
So it creates competition.
It creates unnecessary competition between people, and people begin to hide information from each other that should enable the whole organization to win. So you must stop stank ranking and encourage interconnectedness. And we are in the age of interconnectedness. We are in the age of interdependence. We are now in the network age. We are no more in the command and control. If somebody asked me this morning about carrot and stick, that Sam, what about this carrot and stick approach, where you give them, you put the carrot in front, then you bring the cane and you spank them so that they can move to the carrot. I told the person, there are bigger fruits than carrot. There are cucumbers and there are watermelons. Then why can't your people move beyond carrot and also achieve meats? Enable people to be more productive and give people wisdom, not instructions. Those are the kind of things that retain people. When you treat them like machines, they will get tired, because machines get tired. But when we continually give people wisdom, and that's the difference between wisdom and instruction, give them the wisdom behind that instruction, they are able to do more than expected. When people find themselves in such areas, they will want to wait, despite the money you give them, because they are motivated from the within. Their resourcefulness are being appreciated.
Wow, thank you very much. Thank you very much. Our time is fast spent for this segment. Yeah. Thank you very much, Mr. Samuel. Thanks for being very passionate about this.
It's about people. Thank you so much.
Thanks for coming.
Thank you.
All right, the next segment is the sectorial segment, where we talk about getting into the business of auto mechanic, and the fact that a lot of us feel that it's meant to be done by illiterates. We need to demystify that myth and have a different perception about auto mechanic business. After the break, stay with us.
Okay.
Welcome back. It's still the Profit Point Show, and this is the sectorial segment where we talk about auto mechanic business and how you can get into it. I have in the studio engineer David Ayowela to enlighten us more. Good morning, sir. Thanks for coming on board. All right, so you are into auto mechanic, normal mechanic business as we know it, right?
Yes.
Okay, because I need to understand you so that my other questions will flow with it. So you graduate?
No, not yet.
What's the highest level of education you have?
I'm an ND holder.
ND holder,
Yes.
okay. So you're educated,
Yes.
fine. Which course?
Mass comm.
Mass comm, all right. I'm establishing it so that people will know that it's not just dropouts from secondary school, people that didn't even go to any school that have to go into the business of auto mechanic. So what does auto mechanic business comprise? Because when we talk about it, the only thing that comes to mind are just cars. Are there any other thing that's actually within the mix aside from cars?
Okay, now let's put it this way. When you talk about technicians, in technicians we have different fields. So out of the field, that's where we pick auto mechanics.
Okay.
So auto mechanics deals only with cars.
Okay.
So every problem, any problem on vehicle, either the AC, panel beating aspect, electrical aspect, whatsoever on a vehicle, so it's an auto mechanic. So we fix everything. So an auto mechanic should be able to do one or two things on a vehicle.
Okay.
Yes.
So the bikes and the trucks, you guys don't do that? Or that's another area?
Yeah, it's an auto mechanic too.
Okay.
Yes. Though we have different, let me call it field.
Okay.
Yes, we have different field at which we do things. Okay, fine. As a truck mechanic, you don't expect a small vehicle mechanic to fix a truck.
Okay.
It is not done.
Okay.
Though they have little similarities, thank you. So between they use same thing, but it's just that they have little difference. So
Okay.
that's just
So
it.
you guys just specialize
Years on.
in one thing or the other.
Yes.
Okay. Training. How long should someone train? Someone that wants to go into the business of auto mechanic, how long should the person train before deciding to stay on his own, or you don't need training if you just have a garage, you just bring people to work under you?
No. You need to train, because now let's look at it this way. As a mechanic does not require a specific academic qualification before
Okay.
you start the training. Fine, but a minimum of a secondary, an O level holder should be able, to speak as
communicate.
to communicate. Thank you. To communicate within you and your customer. So if you are going into a training as a mechanic training, at least if I'm not mistaken, you should use up to like 2 to 3 years,
Okay.
depending on how fast you
You can
grab
learn.
things. Yes.
Okay, thank you. The business, most people feel is for informal people that are not educated. How do you think we can change the perception? Or maybe because when we see mechanic, we just see them looking all dirty. They just look dirty. They don't look like they can even speak English at all. So maybe that's why the perception is that if you were to advise somebody going into the business, when it comes to how do you carry yourself, how do you package yourself, how do you set up your auto shop to look like it's not illiterate, how are you going to advise such person?
You see, before you start a workshop, at least you should be able to have a little knowledge of education, a Western education.
Okay.
Because most times, when you don't have Western education, the perspective you have with the person that have Western education is two different things. I don't know if you get what I'm saying. So we have two different people in mechanic work. So there are people that find they are illiterate. Fine, there are people that at least they have little knowledge on Western education. On that issue, what I think to be okay for, to make the whole thing fine is just to, when engaging or enrolling someone into a training, a mechanic training, you teach him the work and don't know how to put it. A kind of a customer relation.
Okay.
Yeah, it's a customer relation. So for you to be able, and if you have those things, those qualifications before leaving your master or your training ground, but if you go into the field, you'll be able to be bold of yourself. At least you'll not look unkept. You know, most times when you look at mechanics in the street, you see them unkept. Sometimes when you see a mechanic, you look at him like, this person, is this really a mechanic or is a madman? I don't even get what I'm saying.
I don't want to say that, but I'm glad you see it.
No, honestly, that's what we of course, we see it. That's what I do for a living, and we see other people's practices. But the way the world is going, the world is moving, the world is advancing. As time goes on, if you are a quack mechanic, it will be very hard for you to fix modern cars. I don't know if you get what I'm saying. Okay, like, for instance now, if you're being given a car to fix, if it is an electrical issue or whatever mechanical issue, for your first thing is just to, there's something we call OBD2 scanner.
Okay.
Yeah, it's a it's a machine. We diagnose the car and see what the problem is. Instead of you just, let's look at this place, let's look at this place, let's look at this place. You keep on doing different things, and yet you've not really gotten what is wrong with the car. So that's why we required an auto workshop to have a auto scanner, computers, to diagnose the car, for you to be able to know what the problem of the vehicle. Then you fix it and.
All right. Is this auto scanner? Is this so expensive?
Yes. Yes, it's expensive. But the list of the auto scanner is OBD2. That's just it's only with ECU, as a problem within the engine.
Okay.
I don't know what I'm saying. It's just problem within the engine, the injector, the plug, the whatsoever within the engine. That's an OBD2. So we have advanced scanners which they can be able to read gearbox, braking system, other electrical, yes, part of the car. So,
okay.
If you want, you are starting up a mechanic business, my advice is you make it a modern workshop. Yeah, okay. If you make it a modern workshop, it will attract
quality customers.
Yeah, quality customers. Unlike bringing let's look this, let's do that.
Okay.
Yeah.
All right. Talking about establishing your business, what is the average startup capital? So if I have $1 million, will I be able to open a modem, or do I need to have like 5 million or 10 million or less?
Well, it depends on the environment. Like we didn't have Belkuta access. If with 5 million naira and a good location, you should be able to start
5 million and a good location. I didn't know
Yes.
that it's that expensive. I thought just get a space, get some scroll and armors and all that.
No. Mechanic work is more than what people think it is.
Okay.
It is more than what people think it is. It's not. Okay. Let's go back to the olden days. The old days vehicles, they don't use injector system. There are some things that new model vehicles they use, which old models doesn't use. Okay, now old models vehicle doesn't use OBD scanners. When for instance, you bring you bring an old vehicle that, okay, this car is jerking. The first thing you go, look at the plugs, look at the carburetor. Are you with me? But modern cars doesn't take that. You look at those things, yet you have not really gotten where you are going to.
Yeah.
I don't know what I'm saying.
Yeah,
so when you plug in the OBD scanner, it will be able to give you the direction of, details of where you are going. So we have there's something called fault code. Okay. Yes, on every vehicle they have fault code. So an OBD scanner will bring out a code, and if you're unable to understand what that code is, you Google it and it will bring you an image. Then you can be able to solve the problem.
So it boils down to being educated and being up to date with technology.
Yes.
Okay. How profitable is this business?
Well, as I said earlier, if you have a good location and a good starting capital, of course you enjoy it, honestly speaking. When you come to a modern workshop, you have a digital wheel balancer, you have car wash. You have so many things that are attached to the car. So when after a work is being done from the workshop, they check the wheel balancing. You sell tire, fine. They'll check your wheel balancing. If it is fine, you go to car wash, they wash it. All these things will be paid into your account. So you get money from the mechanic, you get money from the car wash, from the wheel balancer. So all those money, that's where you
make your money
from.
Thank you very much. Thank you very much, Engineer David Ayonwola. On a lighter mode, I know that a lot of people, when they want to take their cars to mechanics, they say, stay there. Because what he removes is probably what he's going to put there and tell you that it is XYZ, right? And I don't think that is generic. I think it's just what some people do, but it's actually giving a bad name to all mechanics.
Yes.
So how do you advise customers in that case that they need to trust? How do you appeal to customers to trust mechanics?
Well, you see, charity begins at home.
Mm-hmm.
If your child is good at home, I believe your upcoming will be, as in when you grow up, that's what is going to be. I don't know if you get what I'm saying. Yeah, so if you have a workshop and your customer doesn't trust you, it's really not making sense. So I believe I will advise customers to learn how to trust. It's not all mechanic that does that. We have individual differences.
Okay. Thank you very much, Engineer David Ayonwola, for clarifying that, and thanks for coming on the show. This brings us to the end of the show. For inquiries, you can call us on 0809-999-1832. If you have questions or some topics that you want us to cover that we've not covered so far, reach out to us on 0809-999-1832. And for sponsorship and advertisement too, the same number, 0809-999-1832. The show returns same time next week, Thursday, 11 a.m. to 12 p.m. Same station, of course. Thanks for watching and enjoy the rest of your day. Goodbye.